Good day, ladies and gentlemen, and welcome to our class on understanding momentum, one of the most important concepts that you can master to trade successfully in the short-term markets. Now, I would appreciate it greatly if you would subscribe to my channel by just clicking the button down below or hit the bell icon. I promise you, we're not going to barrage you with emails. We'll just send you a notification whenever I upload a new video. That's it. Now, momentum is a word that we hear used colloquially in everyday life. We have momentum in everything. We are often told that sports teams and political candidates have a lot of momentum, like Donald Trump's trying to convince us. In this context, the speaker usually means to imply that the team or the candidate has had a lot of recent success and that it would be difficult for an opponent to change their trajectory. Momentum is the quantity of motion of a moving body. Wow, that's a mouthful. In a basic sense, the more momentum a moving object has, the harder it is to stop. Therefore, you can see the term used metaphorically, like in an example of a sports team. It means that a team is on a roll and is becoming a stronger team for it. And the other teams will have a harder time stopping the team from gaining momentum. Now, in Forex trading, it's very easy to get confused and lost in the markets. Financial charts can be very daunting. And it's very hard to find any type of consistency. Now, my philosophy, and is what I teach in a lot of my classes, is the markets are completely random. So the market certainly is random, but there are periods when it's not as random. And I will show you here a method that we can use to choose assets in a way that statistically produce positive results. So if you believe that the markets are random and price action is the only thing that really tells you what's happening, but price action is dictated by human beings making independent decisions all around the globe. And these random movements are very hard to predict. Okay? You're trying to predict human emotion, humanity, and some type of a formula. But if you believe, like I believe, that there are certain times in which the market exhibits non-random behavior, this is a key to finding what markets are doing and finding predictable movements that you can trade successfully. So what you're looking for are these periods of non-random action. So one of the key tenets of technical analysis is that price frequently lies, but momentum generally speaks the truth. So here, let me pop up a chart. Now here you're looking at the euro US dollar. When we look at two periods on this chart, and you can see I've drawn the trend lines underneath them, the markets had moved into non-random behavior, and they were exhibiting specific defined trends. When we have these specific defined trends, the push up, ease back down, push up, ease, push up, ease, push up, ease, we can then predict and make an intelligent trade. Just like when here the market's reversed and came back down. Push, ease, push, ease, push, ease. But they also had the momentum that would help us. And we have indicators like down below. I have the momentum indicator. And I've drawn this red line. Look what happened when this price peaked out, okay, and began to lose its momentum and reverse. Our momentum indicator was at its highest level possible. So if we understood the momentum and the shifts in momentum, we could start to figure out what the markets were saying. So momentum is a very, very important part of understanding price action. So first we need to look at why momentum is so important to trading. A good way to understand the significance of momentum is to step outside the financial markets altogether and look at an asset class that has experienced rising prices for a very long time. That's housing. House prices are measured in two ways: month over month increases and year over year increases. If house prices in New York are higher in November than in October, then we could safely conclude that the demand for housing remains firm and will further increase. However, if prices are in November suddenly decline from the price paid in October, especially after relentlessly rising for most of the year, then that might provide us the first clue in a possible change of trend. So in real estate, month over month figures provide a measure of the rate of change, which is what the study of momentum is all about. Much like its counterpart in the real estate markets, professionals in the financial markets will keep a closer eye on momentum than they do on price to ascertain the true direction of a move. Understanding momentum is, like my great friend Mark does a great job explaining momentum. And I've recorded and uploaded his classes that you can watch at your convenience. Now there is momentum trading. Okay. And this is the use of using a momentum indicator. Now, momentum indicators, they're useful for resolving the following kinds of common trader dilemmas that the simple support and resistance can't answer. A currency pair is broken after all major support and resistance points and is making new historic highs or lows. So there aren't any support or resistance levels to tell you if it's a good time to enter or a exit point. Now, Bitcoin is one of those things that does that. It's constantly making new highs or new lows. Or just last year when the euro fell way down to like 106, where it hadn't been in like 30 years, okay, we were kind of lost. Now, you could have missed entering positions early in a trend that are going on for a while. How can you tell if there's still time to ride the trend? Okay. If you didn't get in the beginning of a trend, you see it much later. Will it continue upward, or are you getting in too late to make any profit? A momentum indicator will help tell you that. And if you're in a winning trade and you want to ride it for all it's worth, but you don't want to risk staying in too long, a momentum indicator will help you see that also. Now, momentum indicators, they give us a better idea of future price movement because they show whether the trend is strengthening or weakening. And they can tell you if an asset is overbought or oversold relative to the price change over a given period of time. That helps us decide whether the trend is more likely to continue or reverse direction. Knowing these can help you forecast changes and be more profitable. In short, momentum trading with momentum indicators could give you an additional clue to put the odds of being correct even more in your favor. Now, there are some momentum indicators, and some will introduce to you. Bollinger Bands is a great indicator. It gives us lots of information, but Bollinger Bands also gives us the momentum or the volatility of the market. Moving average crossovers do. Okay. And we can use MACD, moving average crossover divergence, relative strength index, and stochastics. So as their name suggests, momentum indicators focus on the rate of price change. While the exact mathematical calculation emphasis vary among momentum indicators, they all attempt to provide a certain perspective, whether price is changing at a fast or slower pace, and whether the changing rate indicates trend strength or weakness. A steady increase in the speed at which a price is rising or falling suggests trend strength. However, too rapid of an acceleration is often interpreted as a sign that the trend is exhausting. So let's go back over here, and what we're going to do is we're going to go drop on this chart. We have our momentum indicator down below, but I'm going to come over here and drop on here Bollinger Bands. And see what happens. Bollinger Bands, and we have whole classes on Bollinger Band, gives us an upper line and a lower line. When price moves towards the upper band or the lower band, depending whether uptrend or down, and gets rejected by that upper band, it's telling you that the trend or the momentum of that trend is waning and could be reversing. So we can see where there's a shift in momentum. If we combine that with our momentum indicator, look what happened here on this red line. Okay, when we had our momentum indicator below maxing out, and we also had price being rejected by the upper band. See, price was staying on the band. The next price couldn't reach close at that band again, and then kept falling down and down and down. That's telling us that trend is in trouble. Now, until it breaks that moving average line, we don't know if it's lost the momentum and going to reverse, but it's warning us that that momentum is waning. So we can also have MACD. The momentum indicator is a common tool used in determining the momentum of a particular asset. So let's go drop MACD on here also. MACD is the moving average convergence and divergence. And we have whole classes on MACD also. So I'm going to turn off, actually I'm going to leave it on. But MACD tells us that a trend is in trouble. We can look at either the histogram or we can look at the crossover. So here we got the crossover of the MACD and the MACD trigger line. Let's put a line on here. Here. Okay, it gave us the information a wee bit later. Let's move it to the right place. A wee bit later. But that was the final confirmation that that trend has ended. So if you had been in this market buying, you would want to make sure first you got the loss of momentum. You got a momentum indicator. You still haven't had the break of the moving average line. But then here we get the crossover. Why does it? We got the crossover of the Bollinger Band. There we go. And so you would want to be getting out of the market at this point, or at least moving your stop loss all the way up to at least that moving average line. Once it touched this moving average, okay, we would want to be looking for a sell or a short position and wait for confirmation of a possible selling opportunity. Okay. All of this is using momentum to predict where price is moving. So the momentum indicator, which you saw on my chart, identifies when price is moving up or downward and how strongly. Momentum measures the rate of change in the prices as opposed to the actual price change themselves. Momentum is measured by continually taking price differences from a fixed time period. So it compares when the current price is in relation to where the price was in the past. The result is then plotted around the zero line. If the current price is higher than the price in the past, then the momentum indicator is positive. If the current price is lower than the price in the past, then the momentum indicator is negative. So we can see here in my first red line, positive, 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 positive. We peaked out here and then it started getting lower, lower, and lower. So that's telling us we've moved down, and here's the zero. Let me put the zero line on here for us. So that's the zero line. So if you notice the moving average crossover, the MACD line, when it is almost all three of these or all four of these are relatively in the same time period. So they're all forecasting and telling you. So now you have three indicators all telling you that the momentum is gone away from this uptrend. So since the momentum indicator does not have an upper and lower boundary, but you visually inspect the history of the momentum line and draw horizontal lines along its upper and lower boundaries, when the momentum line reaches these levels, it may indicate that the currency pair is overbought or oversold. So momentum trading is a particularly popular approach to Forex trading. The momentum trading is a strategy that aims to capitalize on the continuance of existing trends in the market or the reversal of those trends. The momentum investor believes in spotting large price movements. You buy only when the price is moving in your favor and with the hopes of selling at a higher price later. Now, there's many momentum trading strategies out there, but you find the one that fits your personality and your trading best. If you just go do a search on Google and do momentum trading strategy, you're going to find a ton of them. But if you understand the basis of momentum, you'll have it right from the beginning. So we get this question often because we are the website that everyone goes to for trading strategies. I wish I could give you a straightforward answer, which is the best momentum indicator. However, I think you as well as I do know that this is a complicated question. To understand and read charts like a pro, let's follow momentum here a little bit during a trend reversal. And it's just like we just did on the charts. We can see with Bollinger Bands when the trend is moving up, where it is in relationship to the moving average, when it's been rejected by the upper or the lower band. So like any style of trading, momentum trading is subject to risks. It's been found to be successful when price follows on a trend, but on occasion, momentum traders can be caught off guard when trends go into unexpected reversals. Traders should always remember that and always minimize your risk and understand the risk and watch your trade closely. So thank you very much for joining us, and please subscribe to my channel.